How's it going, everyone? Welcome back to the PO3 bootcamp. A lot of you guys have been requesting me to do like a complete full breakdown, kind of a case study of one of my most recent days. This was a decent day for me. We took this on 9 PA accounts and a couple of evals, of course. I think we ran away with just over 8.5K, I believe, if I'm doing my math right. So, yeah. Just going to be kind of fully breaking down this trade here. Was a pretty textbook setup on a week of some pretty weird rough price action, but we actually did get some good delivery today. But yeah, this is going to be a full top-down analysis. This is not necessarily the most traditional PO3 setup you will see, but I thought this is a great video to make because, as we know, market conditions are pretty bad right now, right? Some people are catching good trades, but majority of traders are not catching great entries, especially those who trade on the higher time frames. If you go and look at the daily chart, it's pretty bad, which we'll see in a second. But yeah, even when market conditions are bad, you have to adapt. And this is one of those scenarios where I waited for a little bit of extra confirmation. So enough just blabbering about it. Let's go ahead and go into the breakdown of this trade. So for my bias here, obviously I want to start on the higher time frames. Right now I am on the daily chart, but my indicator, I have the monthly candlestick up. So now a new month did just open. Obviously we just started February. So what do we typically like to see? We like to see a candlestick open, form its low, and then continue higher, right? So what we did here is we opened, we formed our low, and then we're trading pretty much well above the opening price here. Now, another very important thing bias-wise here was a SMT on the daily time frame. So we have this low put in, and then a clear higher low. ES is the opposite. We put in a low and then a lower low. And obviously, we saw a reaction. That's where the bottom of the month was actually put in. So those two things alone pretty much kind of confirmed my bias is bullish for the day. Jumping onto the lower time frames, we can dive a little bit deeper into what price action was telling us. So yeah, that is before the 10 a.m. candle. So pretty much we saw this gap down right here, pretty big gap down, and we actually ended up filling the volume imbalance on Monday and kind of Tuesday here. Now, what I wanted to see was confirmed order flow, meaning PD arrays are being created and respected, and the opposite side is being disrespected. So if I go ahead and kind of just, well, we see obviously this volume imbalance has been disrespected. That's kind of one, but as we can see, boom, bullish 4-hour fair value gap formed. What did we do? We tapped into it, and then boom, we disrespected a bearish 4-hour fair value gap. So respecting bullish, disrespecting bearish. Perfect for me to see. Again, we also got a bullish CISD, and we were continuing to respect this gap as well. So pretty much on all fronts bullish, and kind of just to finish things off here, we got another bullish inverse here. Also, excuse if I cough or I clear my throat. Just got back from the waste management, so I'm definitely fucking feeling the side effects of that, to say so. But yeah, again, on the hourly clearly kind of trending bullish here. Let's go back to the lower time frame and go to the market open. We're also going to flip this back to the 4-hour candle. Again, profile was a little bit messy, but if we do try and make a daily profile here, this is where Asia started over here. So you can see Asia sort of consolidated, was kind of pushing down. London opened and manipulated, and we saw a reversal. As you can see, once New York opens, we're pretty much just continuing off that London reversal. So this is a New York continuation trade from London's reversal. Just another thing to add on to the bias. So right off the bat, I can't really say, anything's too bearish right now. I can't really point out, any bearish confluence. So odds are we're going to be long for the day. Okay, so here we're at market open. Let's go ahead and play it out. So as we can see, again, price action is a little bit messy here. Let's scoot this back real quick. So price action is, again, pretty messy, but If you have watched my other videos or you're in my Discord, you know this. Off market open, let's get the long position for this so you guys can see. So pretty much off the market open move, unless we move, more closer to like 500, 600, 700 ticks off open, we're probably not going to seek out an hourly gap. It's probably going to be a 15. So we also have a ton of low resistance liquidity. So we have one low that has not been taken, another low hasn't been taken, another low hasn't been taken, and then another one that hasn't been taken. Also one down here as well. So we don't really have a gap, again, because the open was a little choppy, right? If we go back on the 15, no gap, right? Nothing. So we're going to go back onto the 1 minute, and pretty much what we want to see is all of this LRL get swept. The low resistance liquidity, a ton of lows built up that have not been taken out. So let's see, the new 4-hour candle opens, right? And we immediately go back down and take those out. Now, I'm not quite ready to enter, right? Because we also had a sweep up here. So, okay, maybe we want to continue bearish, but I'm just going to look for an extra confirmation. So we have a couple of things. We can look for, boom, this gap to get inversed. We can also look on the 5-minute and look for a 5-minute CISD. You'll also see there is going to be a 15-minute CISD as well. But let's stick to the 1 minute for now. Okay, so we're kind of ranging, right? We had, again, we ranged and then got this one move down. Now, again, here we see we have finally inversed this big 1 minute gap. Now, I'm not necessarily just going to enter off of that inverse right there. You definitely can, but I don't really want a 250 tick stop loss. That's probably the very, very, very highest I'd ever want to have a stop loss, is like 250 ticks. So essentially all we did is wait for a retest and an additional 1 minute CISD. So if you don't know what a CISD is, it's 2 or more candles to the downside. Whatever the opening price of that is, which is right here at the top of these bodies, you want a closure above that, essentially. That's your CISD. Okay, it doesn't need to be above the wick, just needs to be above the opening price of the start of that move to the downside. So I believe we get that on this candle right here. Okay, so again, if that moved too quickly for you, let's take a step back, right? 4-hour candle opened. We manipulated, took out a ton of low resistance liquidity, inversed a 1 minute fair value gap, had a retest, and then an additional 1 minute CISD, just to confirm we are absolutely bullish, okay? Now, what do we also see here? Our manipulation put in the low of the 4-hour candle, right? So put in the low of the 4-hour candle. That's something that's super important to make sure you see. And also, we are trading well above the opening price, okay? That likely means the open low has been put in, and we're going to continue higher. So, going to go long and expect the distribution leg to start. Going to go long there, just keep our stop right at this low that we had just put in. Now for targets, we had these highs, these kind of like equal highs pretty much chilling up here. We had these and we had these. So pretty much just some internal highs that we wanted to target. Now, something to note about these highs right here. And a lot of people got kind of slipped up with this. And I mentioned you could take profits at this level, but I was not going to. Why? Because these are a previous session high. These are Asia highs. Usually when we sweep a previous session high or low, we're going to see a reaction. Now, when we look at risk to reward, I mean, we're barely just over a 1 here. Only 160 ticks to that level, right? Odds are, if we do see a reaction, we could very easily come back to our break even. But that wouldn't necessarily invalidate my position, okay? So that is not going to be a take profit for me. I believe This was kind of the first level. We went and trailed our stop. Then we took profits at a 3R. Where else did we go? I believe we hopped onto the hourly time frame here. And this was kind of our stretch target here, which was an hourly fair value gap that had not been mitigated yet. So that's where we were wanting to take this up to. Now let's kind of play through this trade and I'll kind of speak on, how we react to certain situations here. So again, kind of chopping around, boom. So we instantly clap up to Asia highs, right? What did I say? We're going to see a reaction off of those. Now, again, that's not going to invalidate my position, right? But as you can see, what happens, we react, sweep a little bit of internal liquidity, and again, we push right back up. And we tapped, again, right back into that opening price. So again, clearly pushing out of there. Now, this point right here, that's pretty much where I trailed stops to break even. Once we hit this level, I took off about 80% of my profits here and trailed my stop right to, I believe, this low down here. So definitely let this one breathe a little bit. You're going to see this is going to chop around for quite a bit as we were forming the 2 p.m. PO3 setup. Which is, as you can see, pretty tricky to have tried to catch that 2 p.m. PO3. I mean, pretty much manipulated down instantly. Not too much clean accumulation, but yeah, pretty much literally like the last couple of minutes before the session ended, we end up hitting our last target. Literally on the dot, that's where your position would have been closed out on Apex. So yeah, hit all of our targets, 5.3 risk to reward. Now, I do want to mention that I did take a loss before this trade on the day, so I was light risk into this trade. Now, if I can secure, 8K on a winning trade at very light risk, that's going to cover all of my losses, like, 3-4 fold. Okay, so risk to reward is very important. I'm not telling you, take a 5 risk to reward on every trade, but if the setup presents itself and the targets are clearly there, then by all means, it's okay to have a higher RR. Again, I want my winners bigger than my losses. I think that about does it. So yeah, if you guys do have any questions about that trade, please don't hesitate to let me know. Drop a comment of what you guys want to see next in the PO3 bootcamp. If you don't already know, I live trade trades like this pretty much every single day. So if you want to get that for completely free, also a little video course on exactly the way I trade, my Discord, I'm doing a completely free trial. So just click the first link below and we'll get you in there. See you guys.